Good evening. To start out chapter 16, the book reviewed sole proprietorship, partnerships, general partnerships, and limited liability limited partnerships. From there, I had then learned about the basics of terminating a partnership, to then learn about dissolution and wind-ups. So dissolution and wind-ups are the process of completing all unfinished transactions, paying off large debts, all of them, and dividing remaining profits after a partnership has been terminated or dissolved, also known as a wind-up. The book also went on to provide a visual model of what a general partnership agreement form looks like. I think that was kind of the meat of the book. A lot of these two chapters were giving insight into a corporation and the foundation of a corporation, but showing the general partnership agreement form was definitely something good to take in and something to remember, at least for a visual. A joint stock company is a partnership agreement in which members of the company owe shares that are transferable, but all goods are held in the name of the members who assume the partnership liability. A syndicate is an investment group that privately agrees to come together for the purpose of financing a large commercial project that none of the other syndicate members could finance alone. A joint venture is a partnership, an individual, or a corporation that pools labor of a capital for a limited period of time. I then began reading the concept of franchising, including internet franchising, outsourcing, and laws concerning franchising within the state and federal regulation. I had then got a little educated on terms of franchise agreements and franchising fees. And from chapter 16, transitioning to chapter 17, starting out by laying the foundation, like I said, of what a corporation is, what stocks are, and then diving into the classifications of corporations. So first off, a closely held corporation is a corporation whose stock is not traded on the national security exchanges, but it's privately held by a small group of people. A publicly held corporation is a corporation whose stock is traded on at least one national securities exchange. Then a multinational corporation is a corporation whose production, distribution, ownership, and management span several nations. Then, so right here, a subchapter S corporation was a little tough to grasp at first. Took a little research to get familiar with some terms used in it, but I'm sure you understand it, Dr. Gibson. A subchapter S corporation is a business that is organized like a corporation, but under IRC, subchapter S is treated more of a partnership for tax purposes, so long as it abides by certain restrictions pertaining to stock, shareholders, and affiliations. A professional corporation is a corporation that is organized by doctors, dentists, lawyers, accountants, sales, all sorts of professionals, various areas of professions. So a corporation that is organized by whatever profession it may be in a specified in-state statutes. Moving forward, a benefit corporation is a for-profit corporation that seeks to have a material positive impact on society, and the environment. Purpose of this corporation is to benefit the public as a whole rather than increasing the long-term shareholder value. So, and vice versa, a non-profit corporation, you get that, a corporation that is formed for purposes of not making a profit. These would include charitable organizations, religious organizations, educational organizations, and healthcare organizations. So ROBS, Rob's Corporation, you can call it, is a rollover business corporation, is an E corporation that the Internal Revenue Service recognizes under certain conditions. The funds in a rollover business corporation come from an individual's 401k plan. Further in Chapter 17, I had then learned about the financing of corporations. So the financing of corporations would include loans, bonds, debentures. There's more than one specific bond in finance of corporations. So these would include secured bonds, income bonds, participating bonds, convertible bonds, callable bonds, AA bonds, and junk bonds. In equity financing of a corporation, there are common stocks, preferred stock, capital structure, stock warrant, and stock options. Common stock, preferred stock, and capital structure are all pretty familiar. Common stocks and preferred stocks I can transfer to my accounting courses, but so I have a little bit of an idea of stocks and the basis. Chapter 17 had then further discussed the operation of corporations, the role of shareholders within the corporation, discussed what a proxy was, the role of the board of directors, and the fiduciary obligations of directors and officers and managers, along with the corporate opportunity doctrine. To conclude Chapter 16 and 17, the book wrapped up by explaining conflict of interest and business judgment rule. Thank you for your time.